monetary policy, just for the record. Is a defensible approach. Dr. Shelton, I understand that you have long advocated for stable international monetary system, stability in exchange rates, and I doubt there'd be any disagreement that that is certainly preferable to the alternative. The concern I have is that we don't get to control other countries' monetary behavior. We don't have a vote on what they do. And I'm concerned about the extent to which you advocate for our monetary policy to be influenced and reactive to the foreign exchange behavior of other countries. So in August of 2019, in a Wall Street Journal article, an interview that you gave on CNBC was characterized. It said, Ms. Shelton said in an interview on CNBC Thursday that central banks in Europe, China, and Japan are all devaluing their currencies against the dollar through monetary policy. When asked if the U.S. should follow suit, she said yes. Looking at the interview, it does look like that's an accurate characterization to me. In July of 2019, you wrote in a Wall Street Journal piece, and I quote, "When the United States trading partners engage in currency manipulation, it is not competing, it's cheating. That is why it is vital to weigh the implications of U.S. monetary policy on the dollar's exchange rate value against other currencies," unquote. In September of last year, in a Wall Street Journal op-ed, you clarified your view that the Fed should fight this alleged cheating. You said, and I quote, "In an era of worldwide currency exchange, America's central bank should not ignore the effects of movements spurred by other major central banks. With no consistent free trade principles governing global monetary policy, the Fed must take proactive steps to ensure that the U.S. can compete successfully," unquote. So I guess my direct question after reading these things that you have said and written is it your view that if a major American trading partner were to significantly devalue its currency intentionally, aren't you saying that the U.S. should match that devaluation and the Fed should play a role in achieving that devaluation?
Well, thank you, Senator Toomey, for the question, and also for our discussion the other day, which I thought was very substantive. And I agree with what you were saying, that monetary policy executed by the Federal Reserve is directed at achieving our domestic economic objectives, and they've been outlined very clearly by Congress. I have said that among the factors that we need to consider if I were to become a member of the Board of Governors is the political context of the global economy and global finance. And I think we have to be aware of what other central banks are doing. Last year, 49 central banks lowered their interest rate, which caused their currencies to depreciate relative to the dollar, and it wasn't until July that our Federal Reserve decided likewise to lower a quarter point, as they did the next meeting and the next.
So I know I only have 5 minutes and we're down to one. My question is, and I think the only rational conclusion one can come to from reading what you have written and what you've said is that you believe the Fed should actively seek to devalue our currency if other countries are doing that. And I think that's a very, very dangerous path to go down. This beggar thy neighbor mutual currency devaluation is not in our interest, and it is not in the mandate of the Fed to pursue it. I don't think it's achievable. You've got multiple currencies. Which ones would you be watching? Would it be the euro or the yuan? They could be moving in different directions. And a Fed that has famously been unable to achieve its inflation target for these many years, why we should think that the Fed, by changing monetary policy, is going to be able to achieve some currency target, I think is very, very unlikely. So I just want to stress, I think this is a dangerous path to go down, and the recent body of your work certainly seems to be advocating for that intervention.
If I may,
Sure.
Senator, it would be anathema to me to suggest that we devalue our money to gain a trade advantage. What I'm saying is, within the context of the framework for deciding monetary policy, we also have to look at the impact on employment and on stable prices. And if other central banks engage in those unfair practices, it can affect employment, especially our manufacturers who have to compete against.
But we can observe that from domestic data. We don't have to reference foreign exchange rates to determine whether there's an adverse problem with employment in the U.S. Sorry, Mr. Chairman.
Senator Tester.
Thank you, Mr. Chairman. I want to thank you and the ranking member for having this hearing. I want to thank both of you for being here in front of the committee and your willingness to serve on the Fed. I'm going to start with you, Ms. Shelton.